Okay, everybody, it is me, Gregory Mannarino, and all I have to say is, wow, what a day. We have a lot to talk about here. So yeah, Thursday, March 4th, 2021. Today, Federal Reserve Chairman Jay Powell rocked the bond market, and we are going to talk about that. And I want you to understand what's really going on here. So pay attention to this video because this is going to be quite an informative one. So let's start off with this market real quick. An over 900 point swing in the Dow Jones Industrial Average. The Dow Jones Industrial Average was up triple digits at one point, well in the green. And then after Fed Chair Powell, what did he do? Well, in case you don't know, he's putting out an inflation warning. Okay, he said specifically today, and this rocked the bond market, that he expects an inflation spike to occur relatively soon, and it literally set the bond market on fire. In the same manner that suppressed rates have allowed the debt market to stay stable with yields remaining, where they are for a very, very long time, the threat of inflation has the opposite effect. Again, how many times have you heard a Fed president or even Yellowstone himself say, there's no inflation, there's no inflation, there's no inflation? This is a mechanism to jawbone bond yields lower. You see, the Fed is extremely calculating. They never do or say anything by mistake. The threat of inflation devalues future payments on interest relating to bonds. So subsequently, boom, you get that spike in yields. Now, do any one of you find it, at all interesting that the whole week this bond market has done nothing? It's been extremely stable. I mean, it's been incredible to see, honestly. And then today, Fed Chair Powell utters the threat of inflation, and then immediately we get a spike in the 10-year yield. It crossed that threshold that I was warning about. I said about 1.51, 1.52. Once we went over that, stocks started to crater. Like I said, we were down over 700 points regarding the Dow earlier. And then the 10-year yield did normalize a little bit. I think we hit 1.55, 1.56. We came down to 1.53. Okay, we still fell. The market took a hit today. The Dow fell like almost 400 points. But again, if you believe for a split second that this was a slip of the tongue, that this was by accident, you have no idea of what's actually going on here. Nothing the Fed does, nothing, is by accident. Everything is scripted. He knew what he was going to say today. The Fed is trying and wants to gain full control of the debt market by two mechanisms. Number one, yield curve control. Number two, a new version of Operation Twist. I don't know which one is going to come first. But again, the Fed is deliberately creating turmoil in the debt market so they can gain more control. It's all about control. So again, Fed Chair Powell today knew he was going to introduce the prospect of an inflation spike, and that hit the debt market. Boom, yield spike. And again, you're going to try to convince me or anybody that he did not realize that that statement was not going to directly affect the bond market. He knows clearly that inflation affects bond prices. Subsequently, why? The Fed has been saying forever, there's no inflation. No inflation. The jawboning yields lower on top of getting into the market and buying everything. And this is going to take a definite move toward yield curve control, full yield curve control. I think, honestly, over the past few days, the Fed has been testing it. They've been testing if they are able to do it, and it's clear that they could. Today, before the market took a big dive, we had the market trading within a several hundred point range. And the bond market was rock solid. 10-year yield, rock solid, until Fed Chair Powell came out and said what he said regarding inflation, and that really did rock the bond market. They must create a mechanism here, and they have it already, to cause turmoil in the debt market, which will put pressure on stocks. Okay, problem. There's the problem. Reaction. People think it's going to crash. Market's going to go down. Oh my goodness, my investments. There's the reaction. Solution: yield curve control and or a new version of Operation Twist. Everything here has been well thought out. He knew he was going to do it today. He knew it. And he did it. He got the desired effect. It's all over the place. Turn on CNBC, Fox Business, Bloomberg, all over the place. So anyway, so stocks got hit today, but well off the lows. Down 722 at one point with regard to the Dow. Cryptocurrencies today got hit, except XRP, which did catch a bid. Gold and silver, of course, got hit today because of the dollar spike. Okay, all part of the game here. Good. Let them play their game. We're going to play ours. Crude oil, 5% jump today, higher. You knew this was going to happen again. Crude oil, the lifeblood of the military-industrial complex. They will prop this up no matter what they got to do. It has no bearing on reality. That's the truth here. And I think you understand that. That's the gamut of what really happened today. But I want to go through a few things with you, so bear with me. So we found out this. The largest drop in fourth quarter productivity here in the United States in 39 years. You heard that right. In almost 4 decades. But we're booming. Our economy is on fire. Don't forget that. That's the narrative, and you must believe it because they're saying it, so it must be true. But okay, could you imagine? They're trying to sell you that story. Meanwhile, we just had the largest drop in productivity in 39 freaking years. You can't make this stuff up. You can't do it. It's impossible. Now, this is an interesting headline here. This is from ING. Bond market sitting on a powder keg. How many times have you heard me explain to you that the bond market is a ticking time bomb? That's exactly what it is. And the Fed is going to do whatever they got to do to have this turmoil in the debt market so they can gain more control. Give the appearance of a loss of control so they can gain control. This has all been thought out. The Fed knows exactly what they're going to say, when they're going to say it. Today, clear example. It's amazing this week. This was a test on the 10-year yield curve control. Stable all the way until today, when he just happens to say there's going to be an inflation spike, but it's not going to be too bad. Bam! Goes that 10-year yield. Do you think the man is that stupid that he didn't realize? Of course he knew that was going to happen. It was a setup. It's all a setup. Every single thing we're seeing here. And by the way, thank you. 158,000 subscribers to my YouTube blog. I'm doing something right. I am seriously trying, people. I really, really am. All right, let's talk a little further here. Earlier today, before the market took a complete dump, I said there's a bad setup here. 10-year yield spike and stronger dollar, stocks under pressure. And that certainly turned out to be true here. So let us move forward here just a little bit. Just a couple of other things. Now this is Jim Grant. Jim Grant, the Fed watcher. I like Jim Grant. I really do. He's been wrong many, many times with regard to calling what the Federal Reserve would and would not do. But I still like the guy. And this is what he's saying. This is exactly what he said, that the Federal Reserve has left us with a bond market that's all but destroyed. Now, I sincerely hope that Mr. Grant here, sir, maybe you're watching this video, I don't know. You don't believe this is by accident. He knows I believe, at least I think he knows what's actually going on here. I hope so. If not, sir, do a little homework here. It's really easy to understand. Cause and effect. Cause and effect. And this is me earlier. All the no inflation talk for years helped to keep bond yields in check. Now today, to have Fed chair, the chairperson himself, warn on a potential inflation spike clearly would cause bond yields to spike. Powell knew exactly what he was doing. He's a calculating son of a bitch. Let me tell you. The Federal Reserve, here again, this is me. The Federal Reserve is pure, sinister evil. Nothing they do or say is ever a mistake or by accident. It's incredible. It's absolutely incredible, people. But again, what else would you expect here? It's always the same 3 steps. Problem, reaction, solution. The Fed wants more control. In order to gain control, they have to create an environment of panic. And that's what they're going to do. I don't think they're done. There's not enough bleeding here in the market. There's not enough fear yet in the market. You understand? So look for this to continue. Now that the Federal Reserve did their little test here on the 10-year yield over the past couple of days, I even said it. I even said that I believed that this was some kind of a test that the Fed was doing. And I mean, I think I've been proven correct here. Test it, see how it works, have the Fed chairperson himself come out, warn about an inflation spike, watch what happens to the 10-year yield, bam, market sells off. Again, problem, reaction, solution, all about control. People, it's all about control, and you have to understand that none of this, none whatsoever, is by accident. Every syllable that comes out of the man's mouth has already been rehearsed. He knows what he's going to say, when he's going to say it. He's going to call his minions out. I mean, he had Fed Brainerd come out 2 times in the last week saying, this occurrence in the debt market with bond yields, it's concerning. But the market, reacted a little bit. But right out of the mouth of the Fed chair saying inflation is coming, what else would you expect to happen? What else? It's incredible. It really, really is. Anyway, so people, that's where we stand right now today. And I hope you're putting this together in your own head. Hey, look, real quick, for those of you that are like serious gearheads, I put my 68 Camaro Super Sport up for sale on eBay. And right now it's got 1 bid and it is so cheap I almost want to throw up because I put it up at no reserve. Go have a look at it. If you're a car guy, trust me, if you win this car, you will not be disappointed. This thing is insane. I will put a link to my car on eBay in the description of this video and in the comments section. Go have a look at it. I would love for one of my lions out here to buy that car. It's quite a machine, let me tell you. All right, look, this guy here loves you a lot. Please share the video. Think about the things I've spoken about right here. And again, talk about it. Get it out there. Let people understand what's really going on. And again, like I always say, nothing is what it seems. You have to decipher it. You have to look at what's actually going on. What's the underlying reason why things are being said or things are being done, especially by a Federal Reserve chairman. It's incredible. I'm out of here. See you in the morning.